filling in for Rick. Once again, just to let everybody know, he's doing great out of the big old hospital and back home recovering. So we're happy to fill in for him today.
He's slowly recovering. Yeah, we need him.
Jackie!
Hi. Oh my gosh, I'm so sorry. Nothing's working.
All right, we're rolling.
Are we live?
Yep, we are.
We are absolutely live. Welcome, Jackie.
I'm super dark. I'm so sorry. I'm having technical issues today.
So let's start with our market trends. We've got a couple of things to share with the audience here. So thanks for watching like usual. Contracts are actually price cuts. Let's take a look at price cuts. They are up. So the good news is all that inventory out there, we're starting to see some reaction to price cuts. So sellers, those of you that got your homes on the market, if you're not seeing movement, you can see here the last 2 weeks are a little bit lower than we were the week before, but compared to last year, we are definitely up. So,
no doubt.
Trend is higher. Let's move on to active listings. So week number 7, upward trend. I think I mentioned this earlier in the week. Rick was right. He wasn't sure whether that line was going to be lower or higher, but we're up to, where are we at, Jackie? 22,000, 23,000?
Yeah, I thought we were close to 24. And just in talking with our office meeting, I hope you don't mind if I jump in real quick.
No, please.
In our office meeting today, well, first of all, Ruby just listed 2 new properties. I have 2 coming. One is a large horse property ranch, in case anybody's looking for a ranch. It currently has 56 horses on it. It's going to be priced right under 1.6. But I've got 2 I'm listing this weekend. I've got 3 more commitments. And just from being in the office meeting, everybody was talking about the amount of listings coming on. So I think that number is going to continue to grow. But the other side of the coin is that everybody that had open houses this last weekend, where in the previous weeks it was pretty slow, not getting anybody through. One gal said she had 14 people through last Sunday. So I think now that football's done, the Super Bowl's done, I think, Barrett Jackson is done. Is the Phoenix Open, that's done, right?
Yep.
And the Arabian Horse Show ends this weekend. I feel like it's going to keep picking up.
That's very true. Comparative to last year, we're starting to see the average list price, the price per square foot is going down as well. It's lower than it was last year. So we're starting to see that reaction to the amount of homes on the market is causing that price per square foot reduction. If you guys can see that gap there. Are you seeing any price reductions, Jackie?
I am, but not a whole bunch. I was seeing more a couple weeks ago, and that was people that had gone on the market right in the beginning of January. They were still looking at those numbers, and some of the agents too. I mean, nothing against them, but some don't educate their clients very well. They're looking at our peak of 22 and being like, oh, my neighbor got this last year. It's got to be worth more now. And so I was seeing a lot of price reductions like a couple of weeks ago. To me, it seems to be slowing down just a little bit, but it's still more than normal.
Let's back up to that last chart, the chart right before this one. There we go. So we can see that, the demand for homes is still there. We still have homes selling. Mm-hmm. The difference is just the average list price is lower than where it was, last year.
I mean, that chart alone shows you that this year is mirroring pretty much the last 2 years activity. No doubt.
So this is the Cromford report. This sales or contracts. Sales and contracts. We're exactly where we were last year. There we were.
Well, and last year was the slowest we had been since 1995. So, What does that say?
Yeah, we've got that gap in new listings versus homes under contract, basically. Patrick, what are we seeing in the mortgage industry? What are we seeing with rates? There's some big news that was supposed to come out today, or just, I guess, news. I don't know, that's big news.
Yeah, I don't know if it was big news. I mean, obviously, Powell came out and basically, inflation has been hotter than normal. I mean, right now we're seeing here this chart right here. We've got, CPI for month over month. Obviously, has been increasing, which has been catching obviously some of the people off guard. I mean, Powell basically came out and said, I don't have anything earth shattering, but he came out and said there's no reason to hurry, obviously on rate cuts. I mean, the Fed meets next month, like March 18th and 19th. But I mean, and then you got Federal Reserve Bostic coming out and saying, he's seeing still 2 rate cuts built in, but the Fed Reserve is just kind of giving this and, really just unclear message, because he goes, still have 2 rate cuts built in, but forecast uncertainty is pretty significant. And he's talking about 3.5% neutral rate on the Federal Reserve. His word was pervasive ambiguity. So
Say that 3 times.
Yeah. So the bond market, the news that's been coming out has been relatively it's data point to data point each week, but the market seems to be absorbing these data points with relatively ease. I mean, we don't see any crazy days anymore like we did, like you said, the last year and a half. I mean, Bessent, the new Treasury Secretary, kind of came out and said, which was kind of good with the bond market, that he wasn't in any hurry to add any long-term debt. So that obviously that had a good, help the bonds. I mean, relatively speaking, though, and I've said this the last couple of months, you take this 1-year chart on the 5.5% coupon. We're starting here. If you draw just a line, basically we're at the same point where we were a year ago. And you just see these little spurts every 45 days. We see these little jagged up and down in this whole channel here. This is really a channel that's been developing. So we've been seeing, high 6 5/8, 6 3/4 up to about 7 1/4 on the range. I mean, right now we've got rates. Once again, I'm using my typical $475,000 purchase price, 5% down, 780 credit score, and obviously everybody's rate would be different. They do vary based on loan to value, your credit score. This is 780, 5% down. I mean, they have come down a little bit, but we're looking at right now at about 6 3/4. About a month and a half ago, we were sitting around 7 1/8. So we've seen a little bit of, reduction, a little relief in rates, but nothing, nothing that's going to say, oh my God, got to go out and buy a home. So I think it's going to be more of the same. I don't see anything dramatic.
I'm going to interrupt you. Harold asked the question, any DSCR stuff?
I'm not sure what he means by that. I mean, there's
elaborate, Harold. What do you mean by that?
Yeah, there's obviously debt that's, for investment properties, debt to service coverage ratio loans. I mean, their rates are going to be moderating. I just sat down with a lender the other day, and they said that, if obviously rates moderate, they're going to come down. They've been into the, sevens, high seven, mid sevens, low sevens, depending on, you typically have to put, 20 to 25% down on those. They're for investment properties. So I don't know how much more he wants to elaborate. If he ever wants to call me or, have a question, feel free to give me a call. But there's a lot of lenders have got different DSCR programs out there. They're pretty much, they sell to the same investors. We've got 130 lenders that we work with. A number of them have DSCR. They all have a little bit different twist to how they look at it, but it's for investment properties,
Jackie, got somebody suggesting information on Avondale. What do you know about Avondale and where it's going right now? You guys are West Side.
Sure. So anything along that 10 is seen, especially with the new, is it the 202 that now connects and goes south of South Mountain? I'm seeing Avondale and Tolleson especially. They're really taken off. I mean, they, where you had a buyer's market on some of those areas around it, Avondale and Tolleson were doing much better. And I think anything along that 10 corridor is going to do well, especially as stuff comes in because of that 303. And I'm sure you guys have heard how we're going to be the new trucking transport versus California. So we're seeing a lot build up along the 303. So I think anything along the 303 and then along the 10, Avondale, Tolleson, they're doing well.
Hey, to jump in and answer, help it with that. Why don't you go to my screen, if you can? This was on the Crawford report yesterday. Tina had basically pointed out the hot areas out here on the 303 and down here, Santan. You've got a lot of different companies coming in. This chart with these big circles, like you said, you've got the 303 here. You've got the TSM, the Taiwan Semiconductor plant up here. These big circles obviously are bigger.
I think Intel, there's Fujifilm.
You got the Chandler, get the technology corridor through here. You got down here through, obviously Queen Creek. You got up through here, this whole up around the 303 right here. You've got these big circles. This is distribution or warehouse and distribution up along the 303. And then you got the TM. So this definitely shows you the chart of where things are happening in Phoenix. You got Chandler, Gilbert.
And as well. Tolleson was in a seller's market recently. I don't know where they're standing now. I don't know if you have that chart, Jessica, that shows where each of the towns are. But Tolleson is doing really well, and Avondale was kind of right behind it.
Actually, I've got that. If you can hang on here, I think the heat contracts here. Let me see here. Where do we see that? I thought she had it. Bear with me here. I'll try to find it here. I took snapshots of Tina Tambor. Bear with me here if I can find it. She talked about this, what markets are in buyers markets and what markets are in sellers markets. Bear with me here. Where the heck?
Well, anything that's on the outskirts, Buckeye, even Goodyear's been in a buyer's market, but Maricopa, all the outskirts where even Surprise, anywhere they've got, even though I think Peoria and parts of Surprise are going to do really well, I think Peoria is like the hot ticket. Like if you want to buy for long-term gain, it's Peoria, North Peoria, because of everything with the 303 and the chip factory.
So, Tolleson. So we're looking at Tolleson. This is Crawford Market Index for Tolleson in week 7. And we're seeing it basically it looks like it, well, we will see whether it's going to trend similar to last year.
The only other thing is Avondale and Tolleson, what it's affected by the most, it's that price point, the 400s, low 500s. And we all know it's the first time home buyer that's being affected the most with these rates, even though the rates are an average rate for over the years. I mean, I remember when I started in the business, it was double digits.
Yeah. But don't go with that argument though, Jack.
I know. But
I'm not trying to be, I'm going to be counterpoint. Cause like you said, when you're 12, 13%, homes are $100,000. So
I'm just saying that the price point of the first time home buyer, that's what's being affected the most.
Oh, yeah,
and then the majority of them, I've got so many people that they're forced to go new build just because of the rates that they can get.
So this one's seller's market, and we're seeing
this is the Crawford report Tina put out. This is kind of a summary of the seller's market, buyer's market, and balanced market. You got Peoria that's in a balanced market. She's obviously, you've got the outer lying
Tolleson and a
edges.
seller.
Yep.
Yeah.
Tolleson, Chandler, there's some of the stronger markets here. You've got obviously the Queen Creek, Maricopa, Surprise, Goodyear, all the outer lying areas are, back into a buyer's market. So
Where all the new builds are.
yep. So if anybody,
Hey, what are you seeing? There was a slide in there on contributions.
Well, it's pretty much the same. It's been pretty much the same. It has been. Let me see here. I don't know where the heck it is. I kind of took a snapshot.
It was up higher.
Was it up higher?
Mm-hmm.
Let's see where the hell where are we at here? Sorry,
Jackie,
guys.
While he's looking that up, have you seen any changes in new construction with contributions or rate changes? The promotions, or is it about the same that we were talking about a couple of weeks ago?
It depends on where it is. So, for instance, a couple of weeks ago, and I think we mentioned this on the last show, Ruby and I were in Vistancia, and being on the outskirts like that, you would think they would have some good incentives. I mean, Vistancia is out there. They were offering $5,000 for buyer's closing costs and no buy down. I'm like, do you guys have a buy down? No, but your client can buy it down. I'm like, okay. So I was a little surprised.
They have the demand, which
right, and
they have
so
the lack of construction.
Yeah.
So
here's the price. Here's the price concessions chart. Basically, you're getting the most in the $350,000 to $400,000 range. $350,000 to $500,000. They're getting 62% are getting concessions. The average median is $10,500. Basically still. So it's been pretty much steady over the last year or so. So nothing crazy there. Once again, I just don't think that anybody's going to be, if anybody's seeing something from the rates, I think we're just going to be the same old. It's going to be trading in this range. And, like you said, there's different buy downs. I've talked about the 2-1 buy down, but I think I might have said this a couple of times. If I repeat myself for the sake of it, I'm going to repeat it again. There's different buy downs. You can do 1-1 buy down where you start at 6, say you're qualified at 6.99. You can do it for 2 years. You can have a 5.99 rate. So there's you can play around with different concessions, different time periods, 3-2-1, 2-1, 1-1, or 1, which hopefully if we see, right now they're seeing the average that they've been seeing on rates. We're seeing a lot of consensus saying that right here, we pull this up. Wells Fargo's saying for this whole year, 7.1, 6.9, 6.65, 6.5 by the fourth quarter. Next year, 6.5. That's what they're forecasting. I'm seeing low 6s. So, but what I like about the forecast is that typically experts are never right. So hopefully we get something different than what the experts are coming out and saying, and maybe get a little bit lower.
So Harold said, that's like us. I'm in Hawaii. Knockdowns are 1 million when I see Chandler at 489. Looks good. But doesn't mean it's worth it. Yeah, you got to value stuff, that's for sure. Well, guys, shall we wrap it up? Thanks for joining us today. We miss our Rick.
We miss our rocks. I can just feel like our rock star Rick. We're missing him, but hopefully he extends our contract out another year, depending on how we've done.
I don't know after this intro today.
He's just a lot smoother than us. Maybe, I don't know. We're trying to get the information out to people. But
you don't know what you have until it's gone. So
we're practicing. We're practicing without our superstar. We lost our quarterback, and we're maybe going with our 5th or 6th string quarterback, but we're trying.
I just hope he's not sitting there watching like this. We love you, Rick, and we're trying, and we're sending you well wishes.
Absolutely.
So all right.